Okay, yeah, Dangote Sugar. This is the analysis of their H1 2026 results. So you can see that the gross margin, according to the headline, the gross margin doubled, nearly doubled from 12% to 24%. So operating profit was up by over 141%, but revenue fell by 8.9%. There was a profit, so it can be narrated as a profit surge on shrinking top line demand. So the profit surged, but on the top line side of things, you didn't make much sales, but your profit surged. So there is nuance around it, and we are gonna dive into it. So if you are seeing this, so this is the analysis is always readily available on X. You can see that it was available on the 16th of August already, and today is 22. So that's why you need to give us a follow on X using the handle Apex double underscore invest. This is currently our page, so that you can read this analysis over time and when the video analysis come out. So always read here. You see how it was broken down. So we are not going to dive into it. So let's do the one on the video. Later you read this one to augment it and add to what you are doing. So let's go. We start with the price chart of, so this is the price chart of Dangote Sugar. You can see from the time at a time what the price has done. Currently the highest recent high was above 90 something naira. Now currently price has dropped from 90 something naira down to 60 as at the time of recording to 64 naira 55 kobo. So this is what price has done. Then let's look at the books before we now give you some add-ins. So this is the income statement, of course. If you look at the income, so remember you can always download these graphics on our X page and look at it very well. So year on year, you can see what happened in revenue. Revenue dropped. So top line, there was a drop in top line, but there was a massive improvement in, this is what did the heavy lifting. You see this cost of goods sold. So their cost, their direct cost dropped significantly by 21%. So it now naturally made the gross margin to improve. Then another thing that did the heavy lifting was this operating other income, which will tell you where they ended from. We are coming to that. Also did the heavy lifting for this middle line. That's why you see the operating profits now surging. Then finally, the net profit side of things also improved. So the business now did a 180 turnaround, complete 180 from the loss it was making as a result. The loss of 2025, 2024, 2023 was FS driven when the CBN of Nigeria did FS revaluation, floating of the naira. So there was a revaluation. Their dollar obligation hit their bottom line. So that was why we are seeing these losses. Doesn't mean they weren't making profit, but the FS losses we are actually impacting them so bad at the time. But everything has done 3 feet. So for the very first time in a while, they have turned profits. That is why you see the earnings to turning profit. Then you see the margin side of things. You can look it up. Let's look at the balance sheet. We don't want to waste so much time on this. Then if you look at the balance sheet side of things, you see that the assets, of course, the asset now dropped one. Then you can see the equity side of things, the equity dropping. Then you can look at the margins. You are getting to the detail. Liquidity side of things dropped. Also quick ratio side of things dropped too. The reason that improved a little bit is the return on asset side of things and the return on equity, because equity has flipped positive. Then the longer term debt side of things improved a little bit, but the short term debt is still very, very underwater. Then finally, the cash flow side of things. If you look at the cash flow, of course, the free cash flow now for the very first time turned from negative to positive. So let's look at what really happened. So first of all, we can say that the profit is overwhelmingly driven. This profit you're seeing is overwhelmingly driven by FX and macro. It is FX and macro, that's FX driven, with only partial genuine operating improvements. We are coming. Then the 97.4% of the revenue is backed on their 50 kg raw sugar sales with no volume. They didn't give note to the volume side of things. They didn't give notes. They didn't tell us about the prices, but their 50 kg bagged sugar is the product line that is doing the heavy lifting. Then what also helped is like we initially alluded, is that the raw material costs relieved, and that is what did the heavy lifting in the revenue side of things. So the cost of raw materials dropped from 73.9% to 59.5%. So you can see the heavy lifting there. Then they booked an FS gain of over 11.83 billion naira, plus finance cost relieved too. Then across the region, the margins improved due to the margins across region margin improved due to revenue dropping. So in Lagos, there was a drop in revenue of minus 2.2%. In the northern side of the country, there was a revenue drop of minus 15%. In the west, there was a revenue drop of minus 26.2%. Then in the east, there was a revenue drop of minus 13.1%. Then one strategy they have been deploying is the backward integration. What it means is they are now growing their own sugar and cane farm, and they have been deploying capital there. So that project is still on. They even did what we call a deposit to share program to fund that project, and that deposit to share, that fund raised over close to 77.73 billion. So you have to know that, because they don't want to depend so much on importing sugar from Brazil and stuff like that. So they did backward integration, get some farms, start planting sugar cane to help. Then there is also one customer concentration risk, which we saw. One customer, of all the revenue they made in Q2, one customer accounts to over 30% of that revenue. So that is it about Dank Sugar. Some stuffs we found out. So you read this side of the analysis to see what next going forward, and read other things we didn't mention in order not to make the video long. But this is summary of Dank Sugar. See you on the next one. Like, share, subscribe, and share. Thank you.